probably say a similar thing each time. So if you hear that, that's why. Morning, Zach. Great to have you. So let's go on with gold. Let's get started. Remember, if you've got any questions, let me know underneath the video. If you are coming along now, get my free training underneath. Don't forget to like, share, comment, and subscribe. So gold is a really interesting chart at the moment. I know tons of people I teach at this current point are trading it, and they're trading it with good reason. They know fully well that gold has rallied for a significant amount of time. Okay, it's gone up and up and up and up and up. You can see we're now on week 4 after we started this month. Okay, way down here. So our brush on this key of 8 was really significant for us. I called it long, you called it long, I would hope. And I think the majority of people took it long at that point. And you know, you've had a really, really nice push up. So if you're one of those guys who's sitting there with $200 of a move up and still won't take the money, I ask you, what is it going to take you to do it? What is it going to take you to say, you know what, I've got the money here, that's brilliant, I'm going to take it, and literally just cash out? Okay, what is the point in holding on and on and on into these lovely sell areas, which you can see, these areas where people have all said, okay, you know what, I'm going to sell in large volume. You're sat there, don't you think your profits may get deleted? Okay, I wouldn't want to be one of those guys. Remember, if you're holding on to your long entries, okay, if you're holding on to them, then simply all you're doing is saying, okay, well, I think the market is going to keep going up. All right. Now, the problem with that is that makes you a buyer. And if you're buying where the market has previously been absolutely trashed, okay, then it's not a good sign, is it? So welcome, Andrea and Zach, Academy members in the chat box. Great to see you. If you've got any questions on gold, let me know. Tons of guys coming in now. Great to see you all. It's brilliant to have you. So nonetheless, my point is simple. If you had it long, it's time to escape those longs and exit. You've gone way too far up. Okay, your stochastic oscillator is right up here, and you should be saying, you know what, I'm going to take the money and buy sandwich or something with it. All right, it's time to get out. Now, you've come back very, very slightly, and here's the key thing. Some of you may be saying, and I actually know I had someone say this specifically. He said, oh, we only care about the trend. The trend is all that matters. If it's an uptrend, we should be buying. Okay, well, if that's the case, how did you feel about this uptrend? And what happened in this uptrend when you bought at the top? And what about this one? You know, all these uptrends you're buying. Why? You know, he said to me, why are you selling? Why on earth are you selling after the move up, before the move down? And I said, well, if your house has gone up 20%, don't you want to sell it? Would you really keep holding on to it until there's a housing crisis and a market crash like in 2008 and your house is worth less? Or like now in the UK where they're coming down and down and down? Wouldn't you want to sell it for maximum value? Well, yeah, I would, but, you know, and then we go on. So it makes absolutely no sense to buy the highs. Factually, that is an incorrect statement. Buying highs makes money, because it doesn't. It never has, you know? So the people who say, oh, I should buy up here, why are you ignoring all the other times it's fallen at the same point? It just doesn't make sense, does it? How are you forgetting what's happened already? You know? So I'm not saying it can't go higher. I'm not saying it won't beat the highs, by no means at all. I think there's probably quite a good chance that you may beat the highs. Okay? But it doesn't mean I'm going to buy into the highs. It's very different. Letting the market slide so you can get a better short, okay, is very different from buying the market up to your short zone. Now, the reason why I'm not buying it, like I said, is because you've come up $200 in a row. It's a significant amount. Look what happened last time. 1805 all the way to 2068, $260, and then the market just falls way straight back down. So you could have shorted it the whole time. So you can either risk buying at the highs and get no market value and trade against what you've seen already since 2020 and beyond, or you can short and be on the better side of the market. Now, the adjustment I would make comes amid market sentiment. People are still worried, and therefore you're getting a very strict uptrend on gold. When people stop worrying about global crises, will come right down, but you haven't got that yet. So if you did take it short, it may be wise just to lock in gains because you never know. It may go higher, may, but it doesn't mean we're going to buy. It just means we're going to lock in our short profits. So if it does go higher, fine, whatever, we're out of the market, and then we can just wait until it gets higher and reshort. There is nothing wrong with sitting out of the market on your hands. There's nothing wrong with that. Don't be one of those guys who says, look, this short looks amazing. I'm falling in love with it. I think it's great. It's so beautiful. It's so sexy. And then you get cheated on. Don't be one of those people, right? Because if it does go like that and you are heavy short, you will get financially liquidated. Now, the other thing with that as well is I get some guys saying to me that they're trying to trade like me without buying or getting onto my academy. Okay, that won't work and you will lose all your money. Okay, I'm just telling you. That is fact because you just don't have the rules. You're guessing how to trade the correct way. So don't be one of those people. Andre, I see your question about indexes. I'll get onto indexes just after I've done gold, and we'll cover all of that. So my bias on gold, I think you'll fall eventually. Whether it comes soon or not, I don't know. But I'm not really interested in guessing about it. We're coming to early daily support. You've got strong market sentiment persisting the market up, so you could perhaps consider locking in gains, or maybe light hedging if you are someone who needs to. Personally, I would let it fall lower if you're going to do that. Remember, don't try this at home. You need my rules, like the people in the chat box. But nonetheless, I'm locking in short side gains as my bias because, like I said, the strong market sentiment persists. You've got practically no important news today as it stands, or not really anything extremely significant. Just check. It doesn't look like it. So you may find a bounce really early 1986, 1987, looking short gains. And I would probably say, look, just wait till perhaps you get higher. If you're going to reshort, don't do it heavily. Don't go crazy. It is a short. It's a good spot to short, in my opinion. But I'm not, because of the market sentiment regarding war and things like that, it's pushing it up really, really hard and fast. If you're shorting too much, let's say 2050, 2045, then you're going to get in pain if it keeps going higher. So if you're going to short it, anything around here is going to get you market value, but it needs to be very light. Okay, put your risk down because of that market sentiment. And a natural way of putting your risk down as well is by having early exits on shorts you do take, because you're basically aware of the market being so persistent. Look, you can see very early rejection on your 1 hour chart. You've only come to your 40 MA and you're already getting a candle wick pushing you away, right? So you're taking risk if you buy, so don't do that. Just lock in gains in case you come down here. If you don't come down here and you go back up there, you can reshort another day, right? Don't think also that you're going to miss any trade. If you're trading seriously and you're serious about it, you'll take loads of trades in your trading career. It doesn't matter if you miss 1 or 2 or 5 or 10 or 100. Okay, if you take tens of thousands of them, what is the problem? So if you do trickle up higher, it wouldn't shock me. I would prefer short there. If you do fall, you need something really radical, in my opinion. You need something that's going to push really hard, because at this point you just don't have the long side market value because you haven't had a significant retracement. If you do retrace from here, okay, and you get, say, 50% back or so, maybe 38.2, it may be ideal to rescale in long. I would only do so lightly as well, because if you change to your higher time frames, you can see the market is literally $70, $80 off from its highest ever point. So you cannot be buying high there, right? Let it fall. I can't see any questions on gold. If you do have questions on gold, of course, you can pop them underneath or pop them in the chat box. But to be absolutely clear, I'm only short higher up, maybe around 2035, lightly. I'm only long lower down as a bias, nearer 1935 to 1955. Again, lightly. I'm just going off market value, overbought, oversold, overbought, sold. Okay, trade safely, trade carefully on gold. So I think that does it for gold there. As I said, just pop any questions if you need to.